Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex forecast for the week starting of the 27th of October until the 1st of November 2019. Previous week was a very quiet week in terms of the swing moves. The market didn't really provide anything special, but it's part of the game. Some weeks the market is super trending, some weeks it's gaining the next moves, building up the structures, building up or rebuilding the momentum. The ratios between the buyers and the sellers are set up and preparing for the next moves. And as you will see in this video today, the market is setting up several very interesting moves for the coming weeks. Not week, weeks. Swing trading, it's never here and now, it's always on the coming period. While during the day trading opportunities there was several nice moves, and we enjoyed from some of them the previous week, like the New Zealand dollar, like the Euro dollar. If you miss these videos, or if you don't know what I'm talking about right now, on the right corner of the video, right top corner of the video, you will see the direct link to the playlists of the Forex day trading ideas I share with the channel on a weekly basis, on daily basis every week. So just follow there, and let's begin and see what do we. But before that, if you are watching this video for the first time, well, everyone is watching the video for the first time. I mean, if you are new to the channel and watch my ideas for the first time, I would like to invite you to subscribe. Just follow the subscribe button below the video and make sure to enable the ring notifications so you get the notifications when new daily videos or weekly videos are available for you in the channel. Feel free to share this video with anyone who you would like to, because it's open for the community. So go ahead, share with anyone who you believe can enjoy the trading ideas. I invite you to join my free Telegram channel, where we share a lot of great content and material for day and longer term trading ideas. Just follow the link below in the description, and I invite you to join my live trading rooms, where we discuss all the trading ideas day after day, cover them from the beginning until the very end, and build up our trading setups. To join, just follow the link below in the description and join the Traders Academy Club. So, what do we have on the charts then? For that, let's go back to the previous week forecast and review our chart and our trading ideas to see what worked, what failed, and what's still developing and relevant for us. As always, on Monday I will publish my weekly Forex forecast in a text format. So just come back on Monday and to the blog, back to the blog, vladimirribakov.com, and you would see the post already for you, the weekly forecast on a text format, or just come back to the video, and in the description and in the comments you would find the direct link. So what did we have, and what did we trade, and what did we follow, and what's expected for the coming week? So the Euro Kiwi on a triple cycle, we wanted to see retraces and move down, and during the week we got that happen. Sorry, jumped. So we got the retraces, we got the continuation, and that was a pretty impressive continuation. What happened since was the 4-hour chart built its own bullish divergence right here. Just use that, right on a very powerful supportive area. And basically look at the behavior we had here. Bend to bend moves on the Bollingers, straight bend to bend movement, right? Almost duplicated that right after bullish divergence came in play, and the 1-hour chart gave us the structure of the cycles. Special cycle in play, so it's logical we are now in 2 waves correction. And basically with this retrace we can start looking for sell opportunity. The best way to do that, of course, is to see that rounding, right? So rounding, and start to create for us the bearish movement, right? So lower highs, lower lows would be a great sign that we are ready for the bearish continuation. Keep in mind that according to the daily cycle that we can face a corrective cycle in two options as always, two waves down or simple movement inside a range. Both scenarios would be completely acceptable, but both would still represent the idea of sell the rallies. And that's the way I see that. Previous week we got it on the shorter view. That was one of the pairs that delivered to the downside. Now for the next few weeks I would also be looking for possible sell rallies continuation. Keep in mind that this bearish hidden divergence is also developing, and it's very interesting to follow. Next one on the list was the New Zealandian dollar, where we got our rallies and basically what we wanted to see, retraces with bullish evidence and future buys continuation. So let's see how it looks on the chart. We got the retraces and it's building up in the best structure we want to follow, ABCD correction. Also it's building up a bullish hidden divergence, and while the daily have no signs against for the cycle to be over, we will remain bullish as long as we are above this rising trend line, because break below that would simply hint that we are likely returning to the bearish pressure after triple cycle down and two waves correction. And if we break below, sell the rallies would be a good plan. However, as long as this trend line holds, the correction could take place into the bigger picture until we get here some divergence. That's what technically is logical to happen. For that to be tradable, this is the ABCD correction that we currently face. Break above this trend line should deliver the next expected leg. Another thing that we can work with, of course, is to expect the stop first of all, and then on the lower time frame to see the structure of higher highs, higher lows. If we manage to see that, it will be a good idea to start looking for the buys. Next one, Australian dollar, basically the same like the New Zealandian. We expected to see a resistance zone coming in play here. Was marked on the chart. By the way, you can of course always go back and watch the previous week video and watch the text format to see basically these ideas, to read further if you would like. So we wanted to see the blockage here, retraces, and after the retraces look for the buys. So let's see what happened with the Australian dollar. We faced the resistance as we expected to see. We got the correction down, and what happens right now, it's not like the New Zealandian dollar. It does not provide two waves already. It's kind of one straight move to the downside yet. So I would not be surprised if we would see anything like that. And then break above the trend line would be a good sign to go and continue for the buys. Alternatively, we might see here some slowdown with the bullish divergence to form, and as long as we remain above the rising trend line, this could be a very reasonable scenario. So if it builds up with the bullish divergence, what we would like to see is the turnaround to the buys again, and that means creating higher highs, higher lows, even on the one lower time frame, no problem with that. And then we can discuss about buy retraces. Break below the rising trend line would invalidate, as for now, the bullish view and plan. Another very interesting fact here is that the Australian dollar yet maintains this sort of rising channel. So the closer we get to the lower part, of course, the expected bullish reaction would increase as long as we remain within the boundaries of the rising range or channel. Our next one is the Australian versus the Kiwi, where we wanted to go for and look for the buys. One of the scenarios we were following for the buys was the creation of a new drop down here. We got it, and we got a bullish divergence. However, there is currently contradiction between what the lower time frame represents and what the higher time frame hits. According to the daily, this is a triple cycle. That means two waves correction is reasonable, but according to that fact exactly, normally we are getting down to 38, down to 50, which did not happen yet. So in very strong trends, it's totally understandable that if it doesn't reach that level exactly, but in a second you will understand why it is also a concern. The first leg down was bearish trend with two waves correction, and once that this trend line was broken, that automatically opens the room for the possible second leg to happen. So the second leg did happen, and the second leg did create a bullish divergence at the end, but here comes the same concern again. If we analyze this leg, what comes out is that we now build some bearish structure, triple and a double correction, and that's where the contradiction lines up exactly. The higher time frame that normally should support be supported, by the lower time frames moves, that's not the case right now. So here comes the question, so what's going to happen? There are two scenarios with the Aussie versus the Kiwi. So first of all, if we go below this rising trend line on this correction, right, holding this massive area, for example, if we go lower than this rising trend line, we can then expect it to continue lower down to the 38 to 50%, so basically something like that, and then it would be completed to waves. On the other side, if the momentum is strong and if the longer term trend is about to continue straight forward, which definitely could happen, then what we will need to see is that this daily trend line, once it breaks, this would gain the bullish trend structure. And if that happens, then we would be able to start looking for buy retraces again. So we have to be careful with the Aussie Kiwi as for now, the beginning of the week, due to the fact that the contradiction is found between the time frames, the different time frames, and basically there is no current full synchronization. I still love this pair, but I still love both ideas, and it will be very interesting to see which of the ideas, to the upside or the downside with the breakout, would be activated first by the market. And that's the one that I will want to follow. Let me know, what do you think about the Aussie Kiwi? I mean, interesting to hear your view. How do you see that? Do you think we are going straight top to the weekly range already, all the way up towards like 112, 113? Or do you think there is better chance we're gonna visit, first of all, the level of 106, 105? Let me know what you think about it in the comment section below the video. Our next one is the euro versus the dollar, where we got the convergence on a daily time frame, and we were expecting retraces, deep retraces, and buys. Invalidation of the scenario would be break below 61.8 of the 4-hour chart. So let's see, where do we stand with the euro versus the dollar. First of all, the convergence is there and it is in play. The retrace is in play as we wanted and expected to see. And right now we don't have a cross below 61.8, and it's not one wave, it's two waves. So the ideal scenario is coming and building up. We have the bullish structure, we have the two waves correction, and we are building up a potential bullish hidden divergence, or at least ending divergence on that part. And I say potential for both directions because the MACD is still bearish and we don't know on which of the lows it would tick to the upside. So what's the best to do in such case? Draw the trend line, let it be broken, and look for the buy opportunities. Of course, if that becomes a divergence by itself and rounds to the upside, then on the lower time frame we can start looking for the higher highs, higher low structure and try and trade from there. Would possibly be a bit more aggressive. As you know, as lower we go, the more noise could be in the play. That's why the safest way here is go with the original structure of 3 higher highs, 3 higher lows, 2 waves retrace, breakout, and further possible continuation. So that's with the euro dollar. Very interesting fact with this pair is that it starts to gain more sellers than buyers. Not significant yet. However, this structure starts to look more and more developing among the retail traders. To which community do you belong? The buyers or the sellers? Drop your view of the euro dollar in the comment section. Let's see, where do you stand with your view? Do you think we are retracing to the upside and we go further towards 112, 113? Or is that over for the buys and we are going all the way down again to reach the previous low around the 109? Let me know what you think about that. It would be very interesting to hear in the comment section below. Thank you. Our dollar CAD was the next one. We expected to continue lower. Basically, no signs against. 4-hour chart, we wanted to see the retrace and then the sells. Nothing really happened in that direction this week. The only thing happened was a little retrace that continued further. My plan, according to the weekly and the daily, remains bearish. There are no bullish signs. Therefore, if there will be any retraces, I'll be looking to sell them. As simple as that. Nothing changes here. Next one on the list was the CAD franc, where I would be looking to sell retraces. This idea failed completely to me, and we got the retraces, but it was straight above the 61.8, invalidating the whole idea. Failed. Right now, very interesting fact is happening, and this fact is that, as you can see, we are getting closer to the higher trend line. However, the small one, the inner one right here with these highs is trying to be broken, and this tries to create the higher highs. So that might be the sign that we are building up the next future possible buys. However, I still expect it first of all to create this, to complete this divergence, make the correction, and after that we would see. As for now, I go neutral here. There is no specific and clear view I can share. The previous week idea failed. Next one on the list was the natural gas, but before we go there, some new interesting ideas. Euro-yen is the first one that I find interesting. We are facing here a triple cycle from the weekly with a bullish divergence in play. The lower time frame, basically according to that we should be looking for the correction, and we have the 20 candles right on the Bollinger Band, so would be good to see it rising towards the top band first of all, maybe even higher. According to the daily chart, basically what happened there is we are climbing slowly but climbing steadily above these highs, right? We broke this high, creating here some sort of higher highs and convergence idea, and right now 2 higher highs, 2 higher lows in play. The best confirmation for the trend continuation would be the break above this high. However, as long as this trend line holds, the pressure remains bullish. Only if we break below this trend line we should be worried, because that will be ABCD correction. Break below that would open the doors for continuation. Meanwhile, as long as this trend line holds, I would be expecting that to continue higher and to correct the weekly cycle. The 4-hour chart supports that completely by making the higher highs, higher low structure. Right here. Right, we have the trend conditions, and we are developing the 2 waves correction. So the way I see that, these retraces should provide us buy opportunities. And I'll be definitely following where this divergence would complete, and several good zones for that could be found right here. And from there, would be looking for bullish evidences. For example, higher highs, higher low structure on the lower time frame. So the Euro-Yen buy dips would be a first interesting thing. Very interesting fact with this pair, if we take a look on the Forex crystal ball statistical dates, we'll see that the bullish channel is in play. Very strong supportive zones are found here, and the beginning of the month, as you can see, right, is all very powerful zones of the potential retraces. So as we go here closer to the beginning of the month, we should expect to find these buy opportunities. I believe that the euro yen on the next several, maybe 2, maybe 3 weeks, would build up the structure for the coming buys. And the deeper we go here, back to this zone, very, very strong zone, the stronger the pressure would be on the buys. Invalidation once again would be right here, below, right below the trend line. Another very interesting fact is currently the euro yen has more than 85% sellers among the retail traders. That's another reason why likely to assume that the sells would stop somewhere soon on the next several days and provide the next possible buys on the coming weeks. Next one would be the famous euro pound. Now, very interesting fact, above 70% of retail traders are buyers. What do you think about this pair? Are we going up and we found the bottom and the bullish trend is to continue, or are these retraces for sell? From my point of view, we are to the sell direction. So sell the rallies should be the direction here. We have two very interesting things possible to happen. As the 4-hour chart is the one that develops the bearish trend structure. It could be a little retrace of 2 waves, breakout and continuation. Or we could simply move within this range, break and continue all the way down. So from my point of view, the direction is to the downside, and sell the rallies with bearish evidences is the right plan here. Let me know what do you think about it. Very interesting to hear. To which side do you belong? Buyers or sellers? And now let's go to the commodities and a very interesting opportunity on the cryptos. So the natural gas, our bullish view remains, nothing changed, everything remains the same. The only concern here would be if we suddenly go below this rising trend line. The idea, if we go below, it invalidates the bullish structure. The best bullish confirmation would be if we break below this high, because then it would simply give us the higher highs, higher low structure, and we can comfortably expect the bullish continuation. Break below would be a warning sign for all those of you who are involved in the buys, by the way, that we are following for several weeks now. Then it's a good place to maybe reduce the exposure and bring it back if we break the new, if we make a new high, and then with retraces bring back the buys. The reason is when we are moving flat for too long without building the structure of the higher highs, higher lows, it's a suspicious sign. Maybe the market is not ready for continuation up, right? So better to be careful. That's my personal approach. Next one is the gold. The gold, the idea was look for the sells. We have the channel and the horizontal direction range, correction. And this is where we are standing right now. So the channel to the downside was broken, and basically this short-term idea is invalidated, right? However, the longer view still remains here bearish. We are still inside the channel, and this cycle is still likely to be corrected lower. And as long as we are inside this channel, I personally think we should be looking to go lower. So sell retraces, sell rallies is still my plan here. Watching on a higher time frame, it's kind of tricky here, because from one side we are building up a potential bullish hidden divergence, but it's only potential. It's not yet turned to the upside, right? And the other side, if we break the highs and we start to climb higher highs, higher lows, then we should be facing here the final rally until this divergence would complete itself. So it will be very interesting to see how exactly it's building up. As you can see, we don't yet have the higher highs, higher lows, right? We did not yet break above this high to invalidate the range structure or anything like that. So we also, of course, way below the most recent high. So I personally think the chances are to the downside. Will be, of course, trended responsible, not going with big exposure here. Ideally, we want to see that going lower, closer to the cycle correction levels and the rising dynamic support around the 200 moving average, and then attack the buys. Let's see. The market is the one that needs to decide how it will move. What do you think about the gold? Up to 1600 plus or down to 1460, down to 1440 first of all? Let me know what do you think about the gold in the comment section below. Next one and the last one for today, Ethereum. Very interesting structure on this one. Even though it basically created a new little low, it's another fake low with a bullish divergence. So we are still in this structure in the play, but right now we are gaining here higher highs. So we are still missing a full convergence, but it is a long-term trend line and a short-term trend line breakout and the creation of the higher highs. So assuming we are dealing here with the first leg, likely to assume the second leg is coming. And if this is the first leg and the second leg is coming, then this has to have a structure. As per cryptos, it starts to look interesting, a bullish hidden divergence in play, which makes me think Ethereum is a very interesting one to follow to the upside. Also, the 200 moving average is in a bullish momentum with a bullish slope, and we are currently trading below that, rounding the bottom, as you can see. That's what makes me think with a small risk, the potential could be way, way, way bigger for this pair. So that's all for today and for the beginning of this week. I hope you find these ideas interesting, mainly educational and clear to follow. Please leave your support back in the comment section, leave your feedback, and it will be very much appreciated. Of course, your help to the channel, back to the channel. This work is done for you, completely for free, for the community, with the idea and the wish to help and provide some interesting ideas to follow. Thank you very much for your time watching this video. I will see you in the live trading rooms during the week. And if you would like to join us and to enjoy from all the most interesting opportunities as they develop day after day, then join the Traders Academy Club. The link for that you can find below in the description and in the pinned comment in the comment section. Thank you for your time once again. I wish you a wonderful trading week, and I'll see you. Bye for now. Vladimir Ribakov, Traders Academy Club.